Hey, everybody. Can Friday's jobs report turn Good Friday into a great Friday? That's the question that we want to be able to answer by the end of this week. Welcome to SRT Live. I'm your host, Sean, with the Sean Richard Mortgage team here at Guaranteed Rate. Thank you so much for joining me today. And we are in Jobs Week. This is a big week. We've got a lot of economic movement coming this week to us. We had quite a bit last week as well. And so we're going to dive into that right now with the weekend review. So starting with Wednesday of last week, we had pending home sales. So these are signed contracts on homes, on single family homes. And this came in up 0.8%. This was much better than expectations, which was expected decline of 0.3% in the pending home sales index. Now, what's really interesting about this is the third consecutive month of growth in the pending home sales index. So it appears that we are starting to turn the corner with the amount of home sales that are occurring. So we want to keep an eye on this. We also got the third and final reading for Q4 GDP. This came in right in line with expectations, up 2.6%. So we saw Q3, or I guess Q2, Q3 last year with a decline. Q4 started that rebound, and it appears that, Q2, Q3, we saw GDP losses. Q4, solid rebound. And so the question is the worst behind us, or are we kind of stuck in the mud a little bit going forward? So lots of information that we want to look at, but Q4 GDP showing that the economy in the nation growing back again. We also got jobless claims last Thursday, as we always do on Thursdays. As a reminder, this is broken down between initial jobless claims, individuals filing for unemployment for the first time, and continuing unemployment claims, those individuals renewing their unemployment benefits. So when it comes to initial claims, these are week over week numbers, and we got 198,000 new unemployment claims last week. The prior week was 191, so we've ticked up just a bit, and we did come in just a hair higher than expectations at 196,000. So as I've mentioned over weeks past, we've been hovering just a little bit below or above that 200,000 claim level. We haven't really seen that spike since last year. So this is showing us that the labor market seems to be still running a little bit strong, but we've got more data on that here momentarily. So we also got the continuing claims. Expectation, we were going to come in at 1.697 million. We were pretty close to that. We came in at 1.689 million. So relatively on par for the course there. Now, on Friday, we got some really big inflation data. We got PCE, which is personal consumption expenditure. This is the Fed's favorite measure of inflation. The Fed's target inflation number is year over year core inflation at 2%. And that's what they're striving to get us to. Now, headline numbers are what we're going to talk about for a quick moment. Month over month, we came in actually a little bit hotter than expectations. Expectation was 0.2%. We came in at 0.3%, but this was down by 50% since the previous month's reading, which was 0.6% month over month increase in inflation. Year over year numbers came in at 5% increase from this time last year. This was below expectations by a full 0.3%. That was welcome news in the market, and it was also below the previous reading of 5.3% as well. So appears to be moving in the right direction. This definitely helps. Core inflation on a year-over-year basis came in at 4.6% versus a 4.7% expectation. So still slowly inching our way down the scale on inflation. And remember, mortgage rates are very much going to be tied to where inflation is. Inflation is the enemy of mortgage rates. So as we continue to see inflation decline, we're going to see mortgage rates decline as well. The $1 million question is, how fast is that going to happen? Now, let's jump ahead to this week. So today we got some great employment data via the JOLTS report. This is the job openings report. It measures the amount of job openings across the country. Now, this number had been running really hot, north of 10 million, 10.4. What was the expectation? 10.5 and change was the reading of last month. This month, it dipped below 10 million. We got 9.931 million. And this is important. One of the major focuses of the Fed has been how tight the labor market is. Labor market's been running super hot. Job openings have been very high. Unemployment claims have been low, which ultimately, when there's more job openings than there are people to fill them, it creates competition for workers and ultimately wage pressure and inflation. Now, although individual workers can benefit from rising wages, what this does is this creates wage pressure and inflation, which helps keep inflation higher, which is exactly the opposite of what the Fed is trying to do. So the fact that this JOLTS report showed openings dip below 10 million, that is a good move in the right direction. Now, we're going to watch this next month to see if this is a trend or if this is an anomaly, but some really good information coming from the JOLTS report. Now, looking ahead to this week, we've got on Friday, the big number, we get the Board of Labor and Statistics jobs report, looking at how many jobs were created last month. We also get the updated unemployment rate. Remember, unemployment ticked up a little bit last month. And we've had 2 consecutive jobs reports with pretty sizable numbers. So is this trend going to continue, or are we going to start to see cracks in the labor market that lead us down the path of lower inflation? On Thursday, we get our unemployment claims, jobless claims, as we always do. And then tomorrow, we get the precursor to the jobs report, which is the ADP payroll report. Pardon me, ADP has recently changed how they calculate their numbers, and they use a lot more data points. So some say that the ADP report is actually a little bit more accurate than even the jobs report on Friday. So we're going to pay attention to ADP tomorrow and the jobs report on Friday. Very big pieces of information that's going to influence Fed decision. It's going to influence inflation and how we move forward in our economy. All right. So what are we focused on for this next week? Well, I've said it and I'll say it again right now. Number one thing is going to be the jobs report on Friday. Again, last 2 jobs reports came in above expectations, showing the strong labor market we've had. And the Fed is very much looking for the labor market to soften as they consider what monetary policy to continue to take. The second thing that we're focused on is the April inflation data. One of the big news pieces that came out this week is that OPEC is actually cutting daily oil production by 1 million barrels a day. What's this going to do for our economy? Well, first and foremost, this is going to drive the price of oil higher. We've already seen it rise. The price of oil per barrel was for Texas crude, West Texas crude, was sitting below $70 a barrel. It's recently crept back over $80 a barrel, and we're likely to see that creep higher in the coming months. Now, one of the pieces that's going to trickle down to is going to be at the gas pump. There's a chance that if oil continues to rise as a price per barrel, oh, pardon me, let me snag a little bit of water here. If we continue to see oil prices rise, that's going to reflect at the pump, and we could end up seeing gas prices rise up to and possibly above that $4 per gallon range again. So OPEC cutting that production by 1 million barrels per day is pretty sizable. Now, this is also going to impact the Fed's inflation efforts because that price of oil is going to push into the inflation data. Oh my. Now, also, we're going to be watching the inflation reports that are coming out later this month. We've got CPI, which is Consumer Price Index, and we've got PPI, Producer Price Index. The most recent PPI report showed a softening in wholesale inflation, and We're very intrigued to see if that's going to filter through to consumer inflation on the next CPI report. So let's watch for that. And then the PCE report that we got last Friday showed a slight softening. And so we're excited to see what the PCE report looks like at the end of this month. Oh my goodness, dying here on camera right in front of your eyes. And then lastly, we're going to be keying in on rent inflation. So we've seen rents, the pace at rent increases come down significantly over the past 6 months. Rent inflation peaked at around 18%, or the increase in rents, and it's down far below that. It's down below 3% now. And it takes some time for that to filter into the inflation reports. So as that continues to filter into the inflation reports, that should also bring inflation down. And again, with it, mortgage rates. So these are some of the key things that we're looking at for the next week and into April. And we hope to see inflation continue to come down. If you have any questions or you want to continue the conversation, please don't hesitate to reach out. You've got my contact information right here. Always welcome to comment down below. But that is what I've got for you today. Thank you for joining me on this episode of the weekly real estate market update. If you're checking us out on the private Facebook group, thank you so much for being an amazing part of our community. If you're watching on YouTube, be sure to smack that subscribe button so that way you've got up-to-date real estate, economic, and financial information at the palm of your hand. For Powerhouse Real Estate, this was SRT Live. I'm your host, Sean, with the Sean Richard Mortgage Team. Thanks so much and have an incredible rest of your week. Take care.